I wanted to make a quick video just explaining the main differences with your equity options when it comes to your mortgage, because I understand it can be very confusing. So I'm going to be kind of looking at my notes and making this video at the same time, just FYI, if I veer off, and also plan to edit it here too. So welcome back. Basically, I love to break down these big financial decisions and turn them into easy to understand steps where you know exactly what you're gonna do, what's my next move. Today I will be diving in deep and talking about something that does feel overwhelming for most people. Just to be honest, it's your mortgage, it's your home. This is your biggest asset, so this is important. So have you ever wondered if you're making the right decision when it comes to a refinance or any financial decision really, when it comes down to things? So I've dealt with many clients over the years, different life stages, employed, retired, tech savvy, not so tech savvy. Basically, I've seen all walks of life, every stage and everything. Helped my clients locally here in the area, and I've also all over the world throughout the states. So I spent over 15 years in the financial industry, helping people weigh out their options and kind of figure out what's best when it comes down to making the best decision. So I've taken time to really understand how equity works, and so that way I can give my clients and now you the best advice possible. So I've had clients ask me if I charge for my advice too as well, especially on the phone. I don't. I'm just here to help and just guide you along to make sure you're going to make the best decision as well. So I am a licensed mortgage broker. I'm working on my life insurance as well. But I have been in the financial industry for over 15 years. So to break it down, equity simply is just ownership in something you own, which is your home, okay? Equity can be used as well in business or also investments too. But there are downsides. So giving up some equity means giving up some kind of control or stake in your ownership. So it may seem simple now, like in the short term and kind of what you're looking to do, but you want to make sure it's going to be impactful later in the long run, and just to make sure you're making a sound financial decision. So say, for example, you have a home that's worth $300,000 and you owe about $192,000 on it, okay? How much equity would you have on the home that's available to you? So this is really simple to kind of figure it out. So if your home value is worth $300,000, we'll say it has to appraise for $300,000 if your loan requires an appraisal. But you simply take, now different loans have different requirements. A lot of the veteran loans will allow you to take out more equity out of your home sometimes. So it kind of just depends, but I'm just going to stick with the standards. Normally when you refinance, 20% is, 80% is where you want to be. Because like you don't want to, normally you're getting cash out, okay? So I can explain this a little bit more in depth, but anyways, so $300,000, you owe $192,000 on it. How much equity do you have? So you simply just take $300,000 times 0.8. That's how I've always done my math. Okay. So your home value is $240,000. Okay. So you have to take your mortgage out of this number. So what I basically did was $300,000 times 0.8%, okay? Because to refinance and to get cash out, you wanna keep the loan like right at 80% equity or lower, okay? So 240 is like the absolute max I could take out. Granted, my home appraises for 300. Now, if your home appraises for more, you can take more, less, you can take less. I'll go through that too. So you have $240,000, but this is your equity. Now you have to take your mortgage out of the equation, okay? So that's like $192,000. Okay, so that leaves us with $48,000, okay? So There's closing costs when you refinance. Of course, they're all rolled in and wrapped up, so that way you don't have to come out of pocket with as much. If anything, it'll just be the appraisal fee. But ultimately, 48,000 is kind of, I always like to say, you probably have here about 35 to 40,000, because those closing costs are going to be like in there somewhere, and they can range, honestly, like in the loan, they can range. So those closing costs are different because taxes and insurance is different for everybody. But I like to give it like a good like 8 to 10,000, maybe a little bit more depending on the area. But anyways, realistically, this person probably has like 30, to be conservative, 30 to 35,000. Just depending. So 35,000 is what you have to work with. So 35,000, okay? You might have to pay off like debt or something like that in order to make the refi work too. So now thinking about mortgage products, most go up to 80% unless you're a veteran. I already explained that. Sorry, I'm just looking at my notes. Also, all veterans, thank you for your service. Now, in my experience, I've seen many clients struggle with the decisions to take equity from the home or not. Okay, this is why I'm here, and I'm doing what I love, sharing this valuable information so I can help you and your family to make the best decision. I understand these decisions do take time. So when you're on the phone talking to somebody, don't feel pressure to just say yes and move along, because you want to know exactly what you're getting into. You got to do your research, okay? So why do we take out equity? The main reasons would be to improve the home, consolidate debt, or if you just want cash for something else, okay? So everybody wants to do improvements, add things to their home. Well, most people do. It's not always that you move into the perfect home, or maintenance stuff, like the not so fun stuff. This could be like a new roof, or you need to do some concrete work or something like that, okay? So my favorite is to pay off debt, because paying off debt can help and impact you on a month-to-month basis by cutting into that monthly budget and just saving money in the long term, because refinance, you're going to find like that typically is going to be the lowest interest rate, and you can tackle that debt a lot quicker. But it's ultimately up to you. You can do both if you have enough equity. It just depends. But I've helped clients save as little as $200 a month, which was impactful for them, to $1,900. Now, we never know what is going on in a client's life, so we want to make sure that, well, I want to make sure that I'm giving the options up front, straightforward, so that way you have all the information. You can make that informed decision with your partner. Even if you just need a little bit more time, like give me a week, let me research this and this item, whatever works, honestly. So I've helped clients that wanted to do those home improvements, roof, windows, siding, gutters, clients that want to do more like different improvements, like a pool. Maybe they want to update the bathroom just because, floors, kitchen, just for a better quality of living. I've had clients that they want to help their child with their down payment for their home as equity, using some of that equity as a gift. Clients that want to either purchase a second home, investment home, we can help with that. Purchases that want, or clients is, I can't talk, clients that want to purchase another home. Or even land with cash in hand. So you get the cash and then you purchase land. That's fun. Clients going through divorce, equity buyouts. I've had clients that are pregnant, need more space for their children. Clients that downsize when kids get older. Clients that want a lower payment with the budget, which is kind of what I touched upon. It's probably the most common thing there. Okay, so yeah, I've helped clients that just want a lower payment with their overall budget. Clients that don't want to lose their interest rate, their mortgage interest rate, which is very understandable if you refinanced in 2020 through 2021-ish. in 22. So anyways, I have had clients that want to go on a vacation, a dream vacation before they get too old. Clients that just want extra money for savings purposes. Just peace of mind. Peace of mind costs money. Clients that look to use the funds for their business. That's very common. What else? Clients that want to help out the family in any way possible. Like, unfortunate reasons would be like a funeral, maybe there's a crisis, maybe you're just helping out with an emergency car repair or something. Clients that want to build a car. So I've had clients that are building and car enthusiasts. Clients that are planning a wedding. Sometimes they use that. My parents, I believe, did that. But yeah, the list goes on. There's different things that you can use your equity for. It's really what you want it for. It's got to be worth it too. But yeah, my favorite was that client, that old couple that I had that wanted to go on their dream vacation. That's always very, very humbling, especially if they go and then that's what they wanted all their life. So that's really exciting. And it just makes sense. So if you can do it, you can do it. And if it works with your budget, then go for it. But some questions that you should honestly be asking yourself is those other questions, like how long are you going to be in the home for? Realistically, people do stay in their homes for anywhere from like 2 to 8 years is kind of what I'm hearing, but it can be different now. I don't know the stats. Just kind of knowing that people do move a lot sometimes. Is it worth it? The potential gain that you're going to get from taking money out of your equity, is it really worth it? That was something I touched upon there. And if you do move out in a way, would you be comfortable with the sale price and getting into a different home? So basically, when you take out more equity, you're taking out a bigger loan. Don't want to sugarcoat that. You're taking out that loan. So that 240 I showed you, that would be your loan amount. That's the max loan amount. And then you have everything else you can work with. That falls under. But think about those other questions. Like, are you adding value to the home? Do you think you'll get that back? Possibly. Do you feel like the value is going to be going up in your location, your area? Just kind of what you're hearing. But you want to be comfortable with most of these factors, just depending on how much equity that you'd be taking out. And what are options? If you needed money again, what would you do? Veterans are, the VA loans can take more. They can take up to 90 or 100%, which is great. But I always say it's a good thing to have some equity in your home too at the same time, if you don't really have to do that or want to do it that way. And then also being comfortable with your appraisal too. So is your home going to appraise for the amount that you want? What if it under appraises, which is very common? Or better yet, if it over appraises, you could take a little bit more. So just kind of little tidbits there. Property tax. So if your property taxes go up in the neighborhood, your payment can potentially go up, even with insurance too. So you got to consider those things too. Like, get your budget right, see what your payment's going to be, and then add like another 100 to it just to see, like, okay, is this going to work if this happens? So kind of look at those features too. What are you going to gain from doing this? Like, what is it you're truly going to gain? I've collaborated with clients who were sure that taking equity was the right move until we sat down and talked through everything together and decided, okay, maybe not right now, maybe in a few months, okay? Just depending on X, or whatever you have going on, those factors. So anticipate how long you'll be in the home, and you can grab your amortization schedule and figure out what your value would, or your loan amount would be in 2 years, 3 years to see. And if you're comfortable with that, that's good. Let's see. And then also to consider your appraisal. Like, are you going to be coming out of pocket on that appraisal? It's usually like your commitment to moving forward with the loan is your decision to pay for the appraisal. Some appraisals are waived, but it is rare nowadays. I feel like they're just making everything a little bit more difficult when it comes down to things, but that's okay. Understandable with the the economy we're living in. So yeah, if you come out of pocket on an appraisal, that can be anywhere from like $500 to $700, I would say. And then like, what if it's not realistic for you, and like, what if the appraisal underappraises? What's my other options? I can truly help out with that. And then these are all the things that are important. You just want to ask yourself before making these decisions. And amortization, again, is going to help you. The schedule is going to help you determine, look at timelines to see how much money you have owed. So it's not really a good thing to go into refinance or home equity loan or line of credit like blindly. You kind of just want to know and be comfortable with what you're getting into. But yeah, my next video here, I do plan to do a deep dive with home equities versus lines of credit. So this is more for refinance. I'd love to do some math scenarios with you guys. So I can definitely run those, just kind of like, so that way you get the concept and kind of know how to do it yourself to figure it out. Other than that, I'm gonna go ahead and get going. I do need coffee. I still do not have internet. I don't know what's going on in our area right now, but we did have like some crazy stuff go down the past couple days. What's new? Other than that, I hope you have a great day, and I look forward to explaining about home equity loans and lines of credit here soon.